Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're talking about TSLY, the Yieldmax Tesla Option Income Strategy ETF with a current dividend yield. I'm not sure if this is true or not. 57, roughly 58% at the current share price of $14.11. And for the past year, we could look at the yearly calendar. TSLY has been trending down. It's also due to the fact that Tesla over the past year has been also in a very big downtrend. And this is presented with the self, will TSLY be able to recover? And I want to talk about that in this video. I also want to talk about whether or not I think it's a good idea to be buying TSLY at these low prices. And I'll get into some instances where I think it's a good idea and some where I think it's a bad. I also want to compare TSLY to AMZY and Amazon in terms of their appreciation to see why TSLY might or might not be a great fit for you. And as well, I'm going to compare it to MSTY and MicroStrategies, that Yieldmax ETF as well. So today is all about TSLY. If you hold TSLY, just like myself, I hold 70 shares. Let me know in the comments down below how much you hold and how your position is doing. I assume it's not doing well. And so here I'm looking to kind of reconcile with you. I'm looking to kind of be your friend here and show you what I'm currently doing and what I'm currently thinking about my TSLY investments. So that sounds good. We're up to 4,412 subscribers, 250 in the past 28 days. So I want to say, please do subscribe if you haven't yet done so. And let's get into this video. So we're talking about TSLY. The reason why I wanted to make a video is because it's been sliding for the past year and a bit. You can see that TSLY over the max chart history has never really gone up. It's gone up slightly in certain instances, even at these points here before they did the stock split. TSLY hit about $18, which was $2 below its IPO of $20. But for the majority of its time, dating back to November or December 1st, 2022, it's been in a downtrend. And when we look at Tesla, let's go back to December 2022, if we could do that right here. December 2022, this is where Yieldmax IPO'd, right at this level. Tesla was at $123. Since then, we had a run up that went all the way up to about $200. It really went up to about $280, as we'll see right here, $281. And then since July 10th, 2023, we've been in a downtrend for TSLY, which has lasted roughly the past year or so. So obviously, TSLY is probably one of the worst performing Yieldmax funds out there, just due to the fact that the underlying stock has performed so poorly. And currently, year to date, really, we'll do 281. Actually, we got to go the other way around. We got to see what Tesla's current share price is. 156, pardon me. 156 divided by 281. This is going to tell us pretty much how badly Tesla has fallen over the past year. It's fallen about 45% or so, 45%. So you can imagine for the underlying stock being TSLY, this is obviously not good because we want slow appreciation over time in Tesla. That'll give us a hopefully increasing Yieldmax option income strategy ETF and some great dividends. And to be honest, I really don't think Tesla is meant for the Yieldmax strategy, as funny as it is, because TSLY is one of the most popular Yieldmax funds, and it's really for kind of bad reason, because Tesla does not fall into what Yieldmax wants to do. What Yieldmax wants to see is they're looking for obviously income, but they want to see slow appreciation over time, roughly 5 to 15%. And you can see here, Tesla has big swings to the upside, big swings to the downside, big swings to the upside, and big swings to the downside. That does not work well for the Yieldmax strategy, because for the Yieldmax strategy to work, they need small movements. With these big movements, they're unable to capture all of that upside. And with these big down movements, they are taking all of that downside. So you're limiting yourself on the upside, but then when the stock does get up, you're taking all of that downside. And that's exactly what we're seeing in TSLY. And I know this because I've been an investor for probably about a year or so in TSLY, and it is just not the strategy for a Yieldmax strategy. And that's the reason why I wanted to show you guys AMZ as well. I'm not convincing you guys to buy AMZ, but what I'm showing you is why the TSLY option income strategy doesn't work, and why something, for example, like AMZ, when you look at Amazon, an underlying stock that is slowly appreciated over time, roughly about 5 to 15% a month, somewhere within there. That's probably the average. You can see the Yieldmax strategy has actually gone up over time, IPOing at $20 like all the Yieldmax strategies do, they've increased their value over time and at the same time paid a 36% dividend or distribution on a stock that generally Amazon does not pay any kind of distribution. That's the beauty of Yieldmax. And one thing to think about as well is with TSLY being at such a low marker currently, because when we look at Tesla over the long term, we see we really could drop down to maybe $120 for Tesla, or they also have this resistance here at about $150 to $160 or so. So this might be a resistance point for Tesla where Tesla might look to rebound off of here. But just due to the fact that Tesla has declined so much, let's say there's a recovery in sight for Tesla. Let's say Tesla is to bounce back to roughly about $250 over time. Well, Tesla, for the majority of its past, has seen huge upsides, and the upsides are very fast. They all act very fast, and so it's really unsure whether TSLY is going to really be able to capture all those upsides. But I do think that for the long term, if you were to buy Tesla at this price, or if you were to buy TSLY at this price, it'd likely be a good buy, and Tesla would go up. Now, the reason why I have MSTY, which is the MicroStrategy's Yieldmax Option Income Strategy ETF, is because they have had an insane run up over the past 6 months, going about 200 to 300%, almost 400% in the upside. And I want to compare this to how the Yieldmax version has also rebounded in comparison to this, because we might see this in Tesla. We might see a 2x in Tesla over the next 2 years. And in MicroStrategies, you can see here that although the stock pretty much 4x the underlying company, the Yieldmax version, they went from $20 to about $40, $45, and now they're slowly trending down. But over this time period, they were obviously paying out some huge dividends. I think they paid out a $4 dividend on their current share price, which put them to like 150% yield. But what I would say is I don't think it's going to be like MSTR, but I think it's going to be something similar. And that's why I referenced that in terms of Tesla, because if Tesla has a fast rebound, you're going to want to look at what MSTY did. It did really appreciate fast, but it didn't capture all of the upside of MSTR. It didn't capture 400%, right? So that's one thing to think about if you're looking to get into Tesla and you think it's going to rebound pretty fast. So just taking a sip of water. With all that being said, I hope you guys enjoyed this video. I just wanted to shine some light on TSLY, what I felt it was doing right now. I do think there's a potential for a recovery at these current prices and a good buy at these prices, but once again, I don't know how well TSLY really fits the Yieldmax strategy. And so going forward, I might look to invest my money into different Yieldmax strategies and avoid TSLY. But this is just a video on TSLY, showing you guys some possible scenarios of what it might do, how the stock could potentially react if Tesla recovers. I hope you guys enjoyed this video. If you did, we're up to 4,412 subscribers. Give this video a like, stick around for the next videos, and I hope to see you guys then in the next ones. Take it easy, guys.